Hi, good evening, everyone. Welcome back to the channel. So in this video, we're going to have a serious talk about Misti and YieldMax in general. Misti was, for the longest time, the flagship fund of YieldMax, basically for the last, 2 years. And it's been declining. And this is kind of like the official, I would say, break in the dam, or the official, breach of the fortress, so to speak. At least it feels that way. And a lot of people are starting to question their investments. As you all know, me personally, I have never invested any more than, so I have what I call the 10% bucket allocation of my entire portfolio net worth. I only speculate with 10% of it. And I only ever invested into YieldMax products with that 10%. I was never someone that was going to go like YOLO on these products, or just throw everything or do HELOCs or, remortgage my house or anything like that. I've always been like saying, hey, if I could basically invest, say 50,000 and it produces me 40,000 in dividends, which is unlikely to sustain itself. But I looked at it as an experiment. I said, if let's see what happens, basically. So I got a bunch of Tesla, in 2023, and then I've got like 5 other ones. And I'm still holding them. I've got Coney, I've got some Misti, I've got some XYZY, which used to be the Square or the Block fund. So I never was one that like went all in on these products, and I've been consistent with that the whole time. I've consistently said I'm disappointed that I'm not even at break even on Tesla. And actually, now may even be the time for me to just go ahead and sell it, because it's unlikely to ever recover. And a lot of it, I agree with Jay. A lot of it has to do with the underlying, like a stock like Tesla is just so unpredictable. So I've kind of evolved in my investment approach, where I take that speculative bucket and I do more with leveraged ETFs. Of course, because I've become a more experienced investor, and I have big goals going forward. As far as options trading, I personally don't view options trading as speculative as some of these like rapidly declining high yield dividend funds, because it's something that no matter what you invest in, you've got to know what you're doing. You've got to have some reasonable idea of what you're doing. If not, you're playing with fire. Like if you invest in a company like SMCX and have no idea what you're doing, you're playing with fire. But when you look at the history of the company, when you look at like the ups and downs and you map out, hey, in the short term, I see this bounces back, then it fluctuates, you can swing trade and stuff like that. And then when you look at the fundamentals and you see, like on the cash flow statement, when you see that, hey, the company has a positive free cash flow, when you see that most of the fundamentals are on your side, you're more willing to take a gamble or a risk. And you can still be wrong. The gamble can totally not pay off, but at least you went into the decision with all the information that you could possibly have. The way I see it with YieldMax, a lot of investors are not going in with a full deck of information, and they're going in. And I recently heard in another Discord, there was a person that was basically kind of raising her voice and saying these funds go down. And I'm glad that people are discovering that, but that's something that a lot of people have said they could have told you that from the get-go. Now Misti has been one of the best funds. It's been one of the ones that a lot of people have argued that, hey, this proves that the concept works. And I know they're going to say the same thing with PLTY and other ones. They're going to say, hey, this concept, because of the returns of Misti and funds like this proves that high yield dividend investing is the way to get rich. I personally, and I know this may disappoint a lot of you, and some of you may even unsubscribe from me, to each their own, but I've never believed that high yield investing was the path to wealth. I've always been a growth investor who happened to dabble into dividend investing and stuff like that. So on this channel, you're always going to get a hard dose of reality from me. I never want to mislead you all. I'm very transparent. I show all my trades and stuff like that. I show all realized gains and losses. And I'm very transparent about that. And as you all have seen that have followed me for the last 2 years or so, you've seen how my strategy has pivoted. And now it's evolved into a lot more options trades and things like that, which are still going very well. Even though the market, we're definitely in a rough patch in the market. I almost feel like, colloquially speaking, it's like everything's kind of going to shit again. Unfortunately, we were doing so well for most of the summer, but we really need a rate cut from Papa Powell. So H-Town Realtor is on. He says the question we need to ask Jay is, do you pay more than the income generated in any month? It appears you do. Why? So you said, do you pay more than the income generated? You know, I I've seen like others touch on this subject. I think that happens, and I don't think they should do that. That's a strategy I disagree with. I think they should just pay what the dividend's going to be and not exceed it. That's why sometimes I think some of my dividend projections are way off, because I'm basing them on the implied volatility and what's happening with the fund over the past month and the underlying. And a lot of times the dividend comes in way higher and it shocks me. Like, I don't mind. I know a lot of people get really excited when a dividend's super high, but I don't want it to come at the expense of NAV. If well, I'm using me as an example, but I know a lot of you that follow me think like me. That's why you guys follow me. But we don't want the NAV to be sacrificed for yield. And one thing I have to admit, and this may, ruffle some feathers too, but one thing I have to be perfectly honest about, I've gotten a lot of comments that say, oh, these are like annuity payouts. Whereas like when you retire, traditionally, if you're middle class or very blue collar, which a lot of my family was, and your whole career, you spent like in a, blue collar career and all of that, you either had a pension or a retirement account that when you retired, you had the option to either take a lump sum or annuitize it. So when you hear the term annuity, when you annuitize your retirement into a sequence of payments, it's the same concept that applies to the lotto, by the way, which the Powerball is up significantly. Need I say more? But when you annuitize, this is where some of us probably have a fundamental disparity in our beliefs, because when you annuitize a lump sum that you worked your whole life to save up for, that lump sum is like your wealth that you accumulated. And I've heard a lot of people compare the annuitization concept to YieldMax. They're saying, well, basically, I don't care about my lump sum. I just care about the payments. So say you saved up $200,000, $300,000, $400,000 over your entire course of your career. And then you're going to say, well, I don't care about that as long as and here's the thing, say you only live 5 more years after you retire. I know it's kind of a boring subject, but we got to get through this to get to the juicy stuff, charts and all that. But say you live, only 3 to 5 more years. I've literally worked with people that have retired and died the next month or two. And so they're going to sit there and say, oh, well, I would rather have payments every month instead of my lump sum. So in my opinion, not attacking anybody, to each their own, but I could never fathom the concept of like your entire nest egg that you've built up your entire life being annuitized, in the sense that, now let me be clear on this, because there's differences. You can get annuity products that you don't sacrifice your lump sum and they still pay you and your lump sum can still grow. There's plenty of products out there like that. But what I'm specifically talking about is when people roll their pension or their retirement and annuitize it. And then basically they say, oh, well, they retire in their 60s. They say, well, I could live to be 90 and I'll just get paid out for the rest of my life. To me, the way I think, and I think the way most of my audience thinks, we can't fathom giving up your entire nest egg for a series of payments. And it's the same thing when you hit the lottery. Notice I said when, right? Or WIN, when. I was actually saying WHEN, when, but play on words there, manifest it, right? But when someone hits the lottery, and you'll see a lot of people that hit the lottery, they end up broke again, because like I've said before, there's something metaphysical that happens in how you earn money. It's not just having money, it's how you earn it. If it's handed to you, you never appreciate it like you do when you earned it. But a lot of people, so like the Powerball right now, I don't want to say too much because I'm going to make more of you want to play it. And I want to play it too, honestly. So, but the Powerball is at a very high number right now. So let's just say, for argument's sake, say the Powerball is at like $1 billion, and you win that, and then you say, well, I just want the payments for the rest of my life. And then say you unfortunately pass on in the next few years. Well, you just lost. Say you hit $1 billion jackpot, and you got some payments, but you just lost that entire jackpot. That could have been passed on to your heirs, could have been, the start of like a family legacy, something like that. People that are like lifelong investors and financial people, we think about legacy. We think about things like that. It's bigger than just, hey, payments to live on. If you're going to do that, there's Social Security. So Chris R says, unfortunately, these funds keep going down in NAV and distributions. Eventually, they will collapse. Well, I hope not. I mean, there's a lot of people invested in these. I'm invested too. I hope they don't collapse. I know we've got MRNY that's basically like below $2 now, and I think if it hits $1, it will probably reverse split. But at that point, there's little hope unless we get a cancer vaccine or unless we cure cancer. Literally, that's what it's going to take for MRNY to recover, is to cure cancer. Think about that, folks. By the way, if you all like what I'm saying, please remember to smash that like button with 2 thumbs way up if you like what I'm saying. And if you don't, smash that like button as well. Just kidding on the second part. But, this is important. We need to have this frank discussion here. So, like, if you hit the lottery and then say you die, you gave up basically back to the state. You gave up that entire lump sum in exchange for a series of payments. And for me, I have difficulty fathoming that a lot of people think that way. And they say, I basically just don't care about the principal because I'm making X number of dollars a month. So with all that being said, let's get into some charts and stuff like that and hopefully avoid a black screen. But let's look at some charts. Before that, let's look at what Boston Tom has to say here. He says, I'm worried that Alti's dividend drops under 9 cents. Then they need to do a big one to draw people back in. Yeah, and then exceed, like what we were talking about in a couple of comments ago, exceed basically what the payout should be. And then let's see, when MSTR is inducted into the S&P 500, those dividends are going up. Now, here's the thing. Let me be clear. I know I just spent 12 minutes or so on kind of a bit of a critique, but I have a lot of confidence in MSTR. In fact, I'm in leveraged MSTR funds. So I have a lot of confidence in the long-term prospects of MSTR. Little known fact about some of these companies, in case you all just want random trivia here, but MSTR has been around a lot longer than people think. MSTR was actually one of those, I call it .com stocks. If you look at the history of it, it's been around like since the late 90s, basically. So even though it's involved in crypto and stuff like that, this company's been around a long time. It's had a long life, and I think it's got a lot of runway ahead of it too. Same with SMCI. If you all look up SMCI, you look up the history of it, SMCI has been around since like 07. So that was before the big crash. So SMCI has weathered a lot of storms. Like in 07, it was basically, you could call it a penny stock. It was like $1 a share. And then pretty much most investors would have been forced out by 09 when it dropped to like 50 cents a share or 50 cent. When the market bottomed in 09, which, by the way, historically speaking, in the last 20 years was the best time to invest in the stock market. But then from then on, it just soared. And then within the last 2 years, we had that massive exponential run up in the stock price. So those two companies, there's a lot of criticism of them right now, but they've been around a long time. And I personally think they've got a lot of runway ahead of them. So with that being said, let's look at some charting here, because MSTY, I think there's some cause for concern. So let me go to Seeking Alpha here really quick. It's good to be back. I've missed the last few days. I've been on vacation, and unfortunately, sometimes it's hard to, churn out videos when a lot's going on. So first, we're going to do MST. We'll look at the underlying MSTR, MicroStrategy. We'll look at how this one's doing. Let's see. Mr. Brian Brion says, if YM, meaning YieldMax, would just buy shares of MSTR instead of using synthetic options. Thank you. We've asked that so many times, but it's hasn't been incorporated into the strategy on these, but some of them they do. I'm a big fan of the underlying and buying shares of the underlying. He says, then Misti would track MSTR's price movement 1-to-1. Well, let's see what happens when we get these LevMax or Lev Pro or whatever it is. When we get those, we're going to get that 3x to the upside, 1x to the downside. Let's see how they achieve that. Those are going to be interesting. I also sense, I don't know if you've all picked up on this either, but I sense a bit of a pivot in the strategy, and we'll talk to Mike about it when he comes on. But I'm sensing like a, what do you call that? Like as far as like market segmentation, I'm sensing not like any kind of like horizontal integration, so to speak, when in terms of like, you know, business concept, but I'm sensing an expansion into like other market segments, like with this, you know, LevMax and stuff like that. Like obviously YieldMax's niche is high yield dividends, but I'm sensing that they're going to start to try to branch out and diversify, you know, in case, you know, who knows, but the timing, it seems like, you know, with a lot of these dropping, there's more of a branching out going on. And I think that's smart on their part. And if these funds do well, you know, I'm going to be covering them, of course. And I hope all these funds do well. I mean, realistically, you know, I have my realist hat, then I have like my cheerleader hat. I hope all these funds go up, but we've got to be realists too. Let me read some more comments here. It's the synthetic positions that expire before MSTR's price recovers that kills the NAV. That's true. That is very true. However, on the other hand, Ulti does own the shares of the underlying, and they still keep going down. Well, remember what I said a couple of videos ago? I did the analysis of Ulti, and I looked at all their holdings. And with some of them, some of the stocks like Rocket Labs and the electric company that was in there, they had like 200 and 300% gains year over year. So with gains like that, stocks that the portfolio was holding, you would think not only should the NAV be stable, but the NAV should actually be increasing with stocks that like you think about a 300% upside and you're not really capturing much of that at all. But what do I know? I don't think synthetic versus actually owning makes any difference. They have funds who own underlying and they still go down. Yeah, but the synthetics, you know, because they're covered calls and stuff, covered call strategies are going to drop over time. We've got Ant Spray. Though I'm in Misti, the BTC bull run will end in Q1 of 2026. Is that because there's another halving coming up? I'm trying to remember when the halvings happen. My plan is to be out before Xmas. Let's hope for that 150K top. Yeah, we'll see if you call it. We'll come back specifically to this video, specifically to your comment, and see if you call that. All right, so let's look at, so MSTR, a stock that and a company that I am a fan of. We're still up 18% for the year, but since everything pretty much peaked out in mid to late July, we've lost over $100, about $120 in it. So as that happens, you know, the YieldMax products are subject to all of the downside with limited upside in terms of price appreciation, which I know if you have the annuitist, I'll call it the annuitist mindset, you don't really care about your cost basis at all. But anyway, so yeah, since May, we've come down from 25. We were at about 23, July 17th, and we're today's September 3rd. So we've come down to 15. So Misti is starting to see a decline. You can even do like a best fit trend line here, and you'll notice since last March, meaning March of 2024, it's come down significantly, and hopefully it's not on pace for like a reverse split. But you'll see, especially over the last month or so, you know, we're starting to see significant decline, which is, you know, definitely concerning. And I have a feeling, like I said earlier in the video, people are going to pivot to PLTY, but, you know, pretty much all the big stocks have been dropping. So PLTY was at $95 February 18th. It never recovered back to those levels. August 12th, which was really just feels like 3 weeks ago, it was at $78. It's fallen significantly too. Compared to where it opened, though, at about $50 a share, we're still up. Basically, our floor is $50, but like we say, if the underlying keeps dropping, then the YieldMax is going to participate in all of the downside with limited upside, as we say. So let me do a comparison here. PLTR, Palantir stock, and then we'll add in MSTR as well, and MSTY. These are our two, because Misti has been like the flagship for a while, and it might be getting knocked off of its perch. So of all of these over the last year, Palantir is by far the winner. It's by far the GOAT. Year to date, Palantir stock, imagine that. Investing in the underlying as your winner. Imagine that in terms of total return. Well, I said total return, but I've got to actually show you. which I know, it's like impossible for these to outperform their underlying. So yeah, see, so PLTY has participated in about 2/3 of the price appreciation of its underlying. Misti has participated in, I want to say, also 2/3. Let me just do that math really quick. Make sure the math is mathing. Yep, that's about 2/3. So you see it's participating in about 2/3 of the upside, which is good because I've seen worse, actually. But it's participating in all of the downside. So let's do this again. Let's just do price return first and see the difference. So PLTY is down 15% year to date. MSTY is down 42%. A lot of that's come this year. If we look at the last 6 months, down 22%, and then barely down for PLTY. The last 1 month, 13% down for PLTY, 12% down for 16% for MSTY. So like I'm saying, the GOAT is starting to decline. So it's definitely cause for concern. So I just wanted to give you all a real dose of reality there. Real dose of reality. How original, right? But no, it's important. We need to understand what we're invested in and understand that, when there's like a breach in the dam, so to speak, that a lot of money could flow out of these things. So I just want to be a realist, like I always am. Let's read some more comments here. Let's see, where was I? They continue to pay above income generated to call themselves YieldMax. I know we've covered that. That's exactly what's happening. But the underlyings are going down, so the YieldMax equivalent goes down when they pay a dividend, and it's a double whammy. 100%. That's you're preaching to the choir there. PLTY paid $7 dividend. On what planet was that smart? I agree. I criticized it in my last dividend video, which I'm behind on estimates, but I'll try to do another one of those. But I've been saying the same thing. So anyway, folks, thank you all so much for tuning in. Please remember to smash that like button if you all like the video. I just want to be a realist, give you guys and gals a solid, dose of reality on these funds. So thank you all again for tuning in, and we will see you all very soon. Take care. Bye.